Well, what we'll do, I'll run in first, gather up all the eggs so we can kind of just, blast them all down with AoE. Christ. I'm coming up with 32.33 repeating, of course. Oh, fuck. I'm coming up with 32.33 repeating force. Oh, fuck. God damn it, Leroy. I just get cast with that shit. Oh my god. Shut up. I got it. Oh my god. Leroy. God damn it.
It's time for power.
Oh, Christ.
We back kicking.
Hello, fellow Alliance members. It is me, Leroy Jenkins. I am here for the chicken, and here for the upper BlackRock Spires. Pretty silver tier loot. Welcome. Still looking for a few healers and a couple DPS. Must be over 100 DPS. If you're not over 100 DPS, I will not respond. But I will make fun of you in the trade chat, and I might go to the Barons chat just to let them know who you are. Throw in a couple Chuck Norris jokes, okay? So let's get down to business here on Leroy Jenkins' anniversary. It's like the 18th anniversary again, or something like that. And yeah, we pay homage to, you know, a very intricate cultural piece of the mid-trade TA community. So, all right, it's just fun. It's just the aesthetics. Here's the TA, where Bitcoin is, it seems, it is breaking a demand line of sorts. Not yesterday, not the day before, nor the day before that. Today, we are in power hour. We have 43 minutes until this candle closes, until it is a confirmed bearish breakdown. Still above the horizontal line support, if you could say, like the actual structure going sideways. If you look like this, quad screen, top left of your screen, right? All the way back from March 18th, a multitude of touches, touching it again. But as I was talking about with Scott Carney on his stream this morning and during noon and afternoon, the context is pretty bad because, right, what's happening before this test? Well, confirmation of distribution, right? Less market participants involved in Bitcoin in late April and early May than there was involved during that buying climax, it seems, April 14th. So when you have distribution confirmed and then the price rolls over to test the same support, that doesn't really bode well. Okay, now here, like if you're just, oh, we're coming to test it, all right, there's not really context, but the context is, oh, it just made its highest high the whole rally, but now all this time's gone by, and this new data kind of can help us maybe see what could be coming next is not holding the support, but we'll see, because nothing's freaking 100%, man. Never is, never will be. Okay, so that's your corn, your Bitcoin down 2.52%, with altcoins down worse. Scott Carney will be on the stream soon. Let's see. Very soon. I just messaged him. He'll let me know. Okay. All right. So today, Ethereum and Binance Coin both saw 5-week lows, right? Ethereum seeing its lowest price since April 4th. BNB seeing its lowest price since April 4th, all right? That happened today, just a few hours ago, really. All right, that's really the Bitcoin, or the crypto, you know, analysis, man. That's what's happening. If you really want to see the depression chart, the one that I had, it was just devil's advocate of sorts. It was already broken. Let's see if it actually catches follow through here. All right, hold on. Give me an audio check, make sure we're good here. This one, right? It's already broken. So, rising wedge from the bottom to top, 50% retrace is just common. 25,260. A 618 would be a second target, which is 23,858. That's it. Those are the two targets. You're on your way. You haven't even technically tested the 38% retrace yet, though, since the low to the high, since that high got put in. So you're about to. You'll be seeing that real soon. I mean, that is actually the very bottom of that range from March 18th. Okay, so, which is crazy. I thought we touched it. It was pretty close, man. Really close. Yeah, so that's what we got going. Very similar to the Qs. And similar to the, you know, was it the NASDAQ? I think so, yeah. Rising wedge stuff. Okay. Let's go to Ethereum on the daily and look at it. That, remember, kind of going according to what the technicals have been saying, right? I mean, maybe other places they're going to ignore it, but to ignore an up thrust, failed breakout, and then the breakout fails and falls right back below the inflection point, and then the up thrust back test confirmed. It's hard to, if you ignore that, I just don't tell you. It's like, well, remember yesterday you closed below the heart line? All right, so 5-week lows and headed down to 1728. That seems very, very like reasonable to believe, right? Because that is the support of all supports. So, okay, and then if it doesn't hold, and you've got that 200 down there, but you also have this demand line, right around 1620 or so. So there's a little more downside. Ethereum down 2.72% today. Okay. And then BNB, 5-week lows. Bearish engulfing candle in the midst of being painted. You've got 38 minutes till it's confirmed. And it would end up being the lowest daily candle close since at least March 15th. So again, an asset unable to break a resistance, and then a third peak slightly higher than the second and first. Tweezer top, then 2 lower highs, then that highest high, and that's all local. And it's like, that's low risk for short. It just is, even if it breaks upward. So it's a good start, but there's just more time, you just got to play out. These are daily charts. Takes a minute, right? Daily charts, when you identify something, I mean, it might take 2 months. Like Google today. Wow, what another massive impulse candle to the upside, and officially hitting the first target of that trade setup that was posted March 6th. It's May 11th, I know. But hey, when you play the daily, it's like that. So let's. So there is more downside on BNB if the trade setup is going to play out, the short trade setup, because sell high. I hope it fails, man. I hope we just go to 428 sooner rather than later, whatever. But yeah, again, reality does not care about my hopes and dreams. XRP. 3 days out of 4, testing a 200-day simple moving average. That's pretty interesting, right? Wow. Has not yet tested 40 cents. I think you will, especially if there is any follow through from this, demand line being broken on Bitcoin. Any follow through would take XRP certainly down to at least 40 cents. If you don't hold that, well, that's real bad. Okay, XRP peoples, if you're an XRP person, like, hey, I identify as an XRP person. Wow, what is wrong with you? Stockholm Syndrome or something. Find more purpose in life than XRP, dude. Look at it. Just garbage price action. Remember when Bitcoin hit $69,000 and XRP didn't even come close to its all-time high? Okay, XRP gonna change the world, dude. Got it. But not gonna change your wallet. Not gonna change your net worth in a positive way, probably. And if it does, 84 years later, congratulations. Just drinking a health pot, a little bit of mana pot. If you don't know, back in, I don't know. No, it's not a mana pot. It's one of the energy pots for warriors. No, yeah? Leroy Jenkins a warrior, right? Definitely a warrior. So I did just get an upgrade, okay? I got an upgrade. A 4 strength, 4 stem, leather belt. Super exciting times getting those upgrades. One day we'll be able to take down Cthulhu. Might be able to take down Arthas himself, or should I say the Night King. He betrayed us recently. That's where we are in the story. Arthas just recently betraying us, becoming the Lich King, and we got problems. We got big problems up there in, good God, what's it called? In the northeast region of What is it? What are the continents called? I can't. It's been. I used to play like religiously. I can't even remember anymore. It's just out of my mind. Eastern Kingdom, maybe on the Eastern Kingdom, the easterly side, the northeast. What are the no? Not Northrend. Northrend's north. It's not east. Why do you keep saying Northrend? That's Wrath of the Lich King. That didn't even exist. The Eastern Kingdoms on Azeroth. Yes. Okay. So that's XRP. Sorry, it's so dead. Don't blame me. Blame Gensler and Brandon. Okay. The big four. Remember the trend was like it's just looking at some of these assets, kind of a joke. Let's look at Hex. That's down 11%. Look at this scammy price action. Are you kidding? All right, let's measure the low to high here. Wow, an 80, you can't believe it, an 85% swing in value on Hex in technically less than a 24-hour period now. Oh yeah, everything's fine, man. No big deal. Yeah. Someone call Richard Schuler and let him know what's going on. Ironically, the last time we did a Leroy Jenkins stream, I unfortunately improv'd. Someone got him on the stream, and I listened to his infomercial about this coin itself. Okay, and since then I've been very reluctant to ever have anyone on stream ever again because of that nightmare. So, but hey man, years later, here we are. It's a highlight in crypto, 85% swing in less than 24 hours. Seems like a Leroy Jenkins in itself. Okay, so, you know, some of these coins are really melting down now, man. ICX down 9%, bearish engulfing candle, taking out all that stupid loser rally from yesterday is gone. Okay. This is not going to end well. SNX down 7+%. Warned Vet Moonboy about this via text. That's all I could do. Anything below 250 is nightmare, bearish. You're working on your lowest daily candle close since January 13th, and you will be headed back to 157 in time. I know you're right at some level right now. You might pivot on the new day or something stupid, but this is ugly. Light distribution, lower high. That's kind of a back test to 250 as resistance. Very weak here. A lot more downside, maybe an 886. More carnage. GRT, confirmation of distribution after the buying climax. Had a key level. It's crazy, right? Heading on down to 10 cents. Bearish engulfing candle confirmed in 31 minutes. Soon to be testing that 200 simple moving average. Not so great. REN, terrible too. Really, really bad here. Target from here, probably 6.5 cents. You're just hanging on to some level from mid-March. What a joke. What is SNX for? What everything else is for. If there's an opportunity or there's a discernible edge and the market conditions are favorable and decent for upside, a trade. And that's it. It's used for nothing else. And if market conditions deteriorate, new data presents itself, and it's no longer showing us good stuff, it is no longer. It is now garbage, back to loserville, and gonna go test those lows from December. All right, just like all these other. Remember, there's just not enough money that exists in the system anymore to sustain 18,000 digital currencies that are, we call them beanie babies. There's just not enough money anymore. So this will continue to happen. These assets will continue to bleed out. How about Dash? Oh, Dash. Good God, man. The false breakouts, then the confirmation and that it's a loser, and now you're just right back at the same prices from December of 2022. Lowest prices since then, too. Testing it today. Bearish engulfing candle. Working on the lowest daily candle close on Dash since November 28th, 2022. Back at the level of all levels here. You better pray it holds. And it's just more and more of this. All these lesser than coins are all in the same perilous situation. No bids. A joke, man. Matic down 4%, as you can see. Yesterday's indecision on the you know, with the CPI report, and now immediately selling off again, taking out the lowest low from yesterday, intraday, and working on your lowest daily candle close since January 8th. Get it? Party was short-lived because secular bear trend for now. This was the short term, midterm, and then everything's coming back to the way it was. Gotcha. More. We keep looking at them all day. I just don't really, I mean, do you get it, kind of? You understand? FTM, another one that was one of the best. It's awful, man. Oh, it's a harmonic. Okay, let's see if it holds. Let's see if FTM holds this level here. It's below support resistance. It's so bad. Maybe if it was above 40 cents, we should talk, but it's now like below it. I get it. M shape. Is that a shark? Not even yet. I don't think it's quite hit the 886. The 886 is in limbo in between support resistance. So I just look at this stuff and say, all right, moving on. Gonna go look at the stock market because there's stuff going on over there besides just it's over. S&P, another day in May with low volume, with little price action. Bro, I don't even tell you. This is ridiculous. This is stupid. So it's like, look at this price. It's almost like they're joking with us, right? Okay. No higher highs yet. The shooting star bearish reversal on the second test one time, and then here's your second test. The buyers failed on their second test, and they have not changed my mind until they're breaching that with candle closes, and we're running to 4,200. Okay, so still really sketchy here on the S&P. Extremely low volume. Volatility index is, you know, in shambles too. You got the Dow Jones Industrial still got that argument for downside here until you're taking out its own shooting star from May 1st and a confirmation high locally. You just look. I mean, you're sitting at the Leroy Jenkins level. You understand that, right? I mean, you're if you break
32.33 repeating, of course.
I mean, that's when the floodgates open, and you could see a massive sell-off. So just pay attention. Critical areas on the Dow Jones after a completely developed, completely matured, massive potential 3 falling peaks. Classic distribution is all. The stage is set. Right? If this is going to play out, what we're identifying is classic distribution. The next thing to happen would be a massive, violent markdown to the confirmation line of the potential pattern, which is way down at 31,448. You could even say 31,800. That is the second valley of the structure, second valley of the 3 falling peaks. Confirmation line is always that second valley anyway. So just that would be the target. If TA is respected here, then you got 5%, 5.6% downside on the Dow Jones Industrial. Okay, just showing you. NASDAQ Composite. You know, another day. Thank you, Google. Thank you, Big Tech. Propping this market up. Actually really interesting. Okay. Highest daily candle close since August 25th, 2022. Officially broke that fake out zone, right? June 2nd, September 12th of last year, February this year. And recently from April to now, you've finally broken the level. But my God, if that's not the most like pathetic type of breach ever. When big, massive green candles, you know, like when, I don't know, to break out. But yeah, you've technically broken out, man. Let's see if there's follow through. To me, it's still really weak price action up here. I don't know. Yeah, that's it. Buyers defended a key level, and they're trying to push the price away from it. That's better. Better than Dow Jones. Oh my God, dude. It's way better than Dow Jones. But I'll tell you one thing, it's just not a good place to be taking fresh longs. because, you know, no breakouts. I mean, it's confirmed with a candle close, but no back test. I don't know. Just, it's very sketchy up here. Let's go to the IWM. Russ 2000. Dead market, dude. Just dead. Dead market. Dead market, and the bearish argument's still valid until buyers somehow can take the price above 180. Until then, yeah, I think it's awful. Very, very weak price action right now. Okay, not dead. You're not below 170. You're just in between now. You did close the day officially below the 2018 peak. You did do that. Just saying. Okay. So, oh, am I crazy?
Technology. What is that all about? Is it good or is it whack?
It's real good, Ali G. Really good as the consolidation, the upsloping price contraction, which is a form of consolidation as it continues. Highest daily candle close since, you know, mid-August. You will soon be filling a gap at 329, a little bit higher now. I think you're starting to see that 886 officially now. Yep, you've officially exceeded it a little bit. And again, above this level, you know, based on support resistance, there's nothing here until like 335, 334, the high from August. That's it. That's all that exists. So just continues to upslope. Long-term downtrend. Just don't forget it, man. Don't understand. You have not taken out the high from August yet. And this is some serious price action, like a serious consolidation, and it's normally bearish continuation, but it hasn't happened yet. And you can thank a handful of mega tech stocks for keeping the whole market afloat. Is this stream on? Can y'all hear me? We okay? Just making sure. All right, just trying to have fun. I know it's like, God forbid I have fun. I'm trying to, like, you know, not go crazy, right? With crypto now dead, the dead market. So, you know, whatever. Been a pretty eventful week, right? 80 stream, 90 stream, now Leroy Jenkins stream with Scott Carney. It's pretty good. Well, I did a, you know, almost 2-hour stream with him this morning today. So if you want to rewatch that, we had a really good discussion across these markets. So, all right, there are your index funds. We can look at gold real quick. You know, still at that area where it's just, you can't, it's to take a fresh long is just literally the inverse of what one's supposed to do at 886s after harmonics complete. Yeah, it's true. How's my streamer mode off? All right, Scott's ready in 1 minute. So gold still up there, hasn't reacted yet. Crazy. Will it ever react? Don't know, because fundamentals are so obscene that it's just hard to imagine, you know, because just everyone's buying gold right now. So, okay. Silver, yikes. Couldn't break the resistance. Tried once and then twice. Confirmation highs. Dang, man. I had not looked at silver. I went out on a nice, I mean, it's down 5% yesterday. What happened? Did they find silver? But, you know, this is the risk you run, right? The risk someone runs when they buy after an impulse up and it's been a resistance that it's undeniable, has been tested twice and has not broken. This is the risk you run. This could happen to gold. This could certainly happen to Bitcoin. Bitcoin and gold are in those same situations as silver right now. You know what wasn't in the same situation? Amazon, Shopify, NVIDIA at the time, like way back in March with the inverse head and shoulders, February, right? They were not, like right now though, right? Going long on NVIDIA, you run the risk of seeing big markdowns like this after long extended rallies. What's up? I don't want to eat the bugs. Thanks, dude. Before 20 super chat. Okay, silver. Yikes. Big yikes, man. Oil flat. Oh, wheat. Yeah, wheat's down 2%. Big bear market, man. Big old bear market. Bear market was reconfirmed, I think, December 9th when it broke that and made an actual lower low. But then that confirmation and distribution, man, this was going on in the index funds last year multiple times. And look what you're doing now. Look what wheat has done. A massive bearish breakdown. You got to go back, man. Where is it? High from 2008, 2009. Wow. Yeah, there's a lot of downside, a full reset coming. It's cyclical, right? The cycle ended with an all-time high and then an attempted rally, which is what we think is going on with index funds and even the NASDAQ, right? You're doing this attempted rally, lower high in the previous high, and then you will roll over. That would be the confirmation. And yeah, there's just way more downside. I mean, this is just such a big level. I mean, maybe 594 would be next on deck. Then after that, 530, maybe in 426. It's just a bad level. I get it. Is it a falling wedge? No, it's not really. It just, no. The bubble popped on commodities. That's that, or on this one anyway. I think it's the same way with soybeans was probably. Oh, it was up, today. Yeah, I mean, soybeans the same thing. Like, okay, remember when, like we looked at the stock market or the NASDAQ or the Qs and remember the rising wedge after the drawdown? Okay, well, this one broke down. And this is like the next target's 1300. If you stay below 1450 long enough, you bearish back test. Look at the bearish back test. Kind of like an evening star right there, reversal. And so, yeah, way lower. Market participants confirmed what was once resistance is resistance again. That's bad. Very, very bad. I'm going to put my headphones on. My Leroy Jenkins headphones, okay. Man. Well, I don't know, dude. There's more to talk about. There's like way more, like the charts and stuff. Like the banks, man. Oh boy, we haven't even tapped the banks. Like tapped the surface of the banks. Our discussion, man. It's bad, real bad. The weakness came in again today, and many assets saw multi-year lows on the close. Woof. Throw the dang towel. Correct. Can y'all hear me? We still good? All right, so that's just the discussion on some of these commodities. Meh. Yeah, so just real quick, KRE, regional banks. Down 2.4% today. You can thank PACW and CMA for that. As you get what happened, the price action correlating to levels, what was once a support resistance, even in the past 2 days before today, it gapped down and is now formally back tested what should have been support as resistance on close. Yeah, it's up 0.39% after hours. No one gives a crap. That's such a bearish Form of price action. Look, it's a level. It's from 2014. It's resistance now. So, I mean, 35.10 is a good target. And you got to wonder where these regional banks are going to be once you get back down to $35. God. He said he's cracking a beer. He's here. All right. I'm going to give him a call. Scott Carney, everyone. Hello?
Hey, can you hear me?
I can hear you. Yeah, can you hear me?
All right. Yep.
Sweet. Welcome to the stream, man.
Had you in the background.
Welcome to Upper Black Rock Spire in the middle, or like the south. It's a southerly region of the Eastern Kingdoms, and we're in here looking for some fat loot, you know, and some chicken. What kind of beer are you drinking?
Yingling.
Yingling. Okay. All right.
You know.
That's good. That's a fine choice of alcoholic beverage to consume on a Thursday evening in Miami, or I mean in the Eastern Kingdoms. And yeah, you came in at a time of the stream where I'd gone over, you know, kind of the overall crypto sentiment market, and then looked at some commodities, looked at the index funds, but now I'm looking at the KRE, the regional banking sector. What are your thoughts on what's going on there, man?
That's just pure price action. I mean, look at the candles. It's not. It really hit a lot of overextended levels on that drop last week, and I mean that's about as ugly as it gets. But until you see anything, you need 2, 3, 4 green candles, something, before you even consider it. That's a knife.
Yeah, it is, right?
I
The
took
gas.
a shot. Yeah, I was taking shots at PNC last month and Bank of America on the first time, but then they didn't move and a couple other banks blew up, so it wasn't, you know, I just stayed away until more of this happens.
And yeah, here's your PNC that has a technical breakdown. Occurred yesterday, and it was brutal. It's like the buyers pushed the price up intraday to almost fill the gap, but they were unable because there was such lack of demand on this asset. That's what happened, right? They tried and actually failed to fill that. So and then sell off, and yeah, it's up 0.26% after hours, but anything below 115, 116 is just so bad. Right, looking left here.
And the weekly charts are still, they're bad. I mean, those weekly candles are really starting to accelerate. I just think.
That was ugly. Yep. So you got 20 hours until the lowest weekly candle close since October 2020. And yeah, I mean, the next level is actually $100 on PNC. You can see the high from 2015, and that is where buyers, you know, after the spring occurred, the buyers defended that same old level back in July 2020 before that major markup. So that's it. Target is $100 on PNC. You're going to get, not last week, but this week, a confirmed bearish breakdown with candle close in 20 hours.
Yeah, and it's pretty clear every time this thing does more than a 50% correction, it's like a cycle 886 across the board on the banks, and longer term even. You still have a ways to go. I mean, it's really surprising, but yeah, maybe it's worse than they want to let you know.
Yeah, it has to be. I mean, it really is. Remember, transitory, inflation's transitory. I mean, just like they lie. They just constantly lie. It's not even, they're more so a PR firm than anything else, right? That's what the Fed is, and the Treasury. They just, all right, how do we make this just not sound bad? You know, we have to, they're politicians, man. It's a beauty pageant. It's not like reality. Reality are these charts going on. So I mean, and which is
That's
terrible.
America right there.
On the
Nefarious
forest
Technology tipped $25.
He
Scott,
said
my
some-
man. Say for the Yangling
CMA's
and the Makers Blue
Comerica?
shots.
Yeah.
Shorting season. It's shorting season, yo.
What's he saying?
Hey,
You see it?
Rick, couldn't be happier. Meme coins make me cry for people's wallets. Fools and their money soon parted. Love the helm, Mitch.
Oh, thank you for the Eastern Kingdom Alliance currency. 25.
Shorting what though? That's the question. What are you shorting? What are you going to short?
Yeah. Well, there had been opportunities on crypto. I'll show you one, and you tell me. I'm gonna walk through the process, and then you can tell me if it's made sense or not. Because when you come up with arguments for shorting or going long, you're presenting an argument like you'd be a lawyer to a jury. And this was my argument on KNC. And I'll even say, I'll announce like what I said about everything. It was like a collective argument against all crypto. It just this one just happened to be. I was in spacebar. It seemed like it was like, oh, this is a great one. So I was saying, I'm scrolling up here. My God. Wow, putting a lot of work in on these charts only. Okay, so I'd been talking about the SEC's war on crypto exchanges and the very clear destruction of liquidity on-ramps into crypto exchanges. The profound effect is shown on any low-tier S-coin. Take a look at KNC, for instance. And I'll put it up right now. KNC, for instance. Nothing bullish about this price action. It's staring into the abyss. Notice the 200-day simple moving average being rejected for a second time. And I said they've succeeded in killing, the altcoin market for the most part. I know there's Pepe, S coins on Uniswap, whatever. They're not even on these bigger exchanges. That's maybe them circumventing this. But for the ones that have already existed, you see what's happening, like this level. Gosh dang it, doesn't on this publication doesn't show it. Let me pull it up. God. One moment. KNC, there it is. All right, so KNC right here. I've just been really slow. I gotta restart my computer at some point. Wow, this is like slow, dude. All right, so the reason for going short was one high, then the second high it was abysmally lower than that high. So that's like confirmation high in my eyes. And then it was just right here. It had fallen just below these two levels here, where you can tell what happens below these levels. In 2018, look at this straight up and down and up price action, and then straight down type behavior, even in November and December, and even January this year. So that was the thought process for going short, or in publishing this trade setup, right? Because of that. So what do you think? I mean, is that like that argument? You're just playing the trend that is, I think this was their argument over all these months, and it was terrible. And you got this really deep retrace on B, the lower high on C, which is like that, butterfly type behavior, where it would be an extension on C to D. Hidden bearish divergence.
Straight up in January, February, and then rolling over. I mean, there's not. What's there? What's there on the daily, other than that being just a reaction?
Legit nothing. Nothing.
Yeah.
There's just no support resistance until like 31 to 37 cents. It's all way lower. So that was it. It's like if someone's going to participate, it's not a terrible time to be long, but a short might be. If there's actually an actionable trade where, look, above that 69.5 cent level, that invalidates my entire thesis, my argument, right? But it never got back above that level. Because there's a problem with crypto right now. Liquidity, no one's buying. Why would they buy? Money's hard to come by now. Debt is it's expensive now. So it's not cheap anymore. So if it broke that level, then yeah, it could very well run to like 90 cents. But you get stopped out, minimal losses, and then it runs to 90 cents. Like whatever, failed trade, failed idea, those happen. But it hasn't done that yet, and it had a really good start, a really good kickoff. It's not even close, but you're in the green and just waiting for more deterioration in this market. So just waiting. You think Bitcoin breaks that support? If it does, which it hasn't yet, you could only use your imagination of where these lesser than S coins are going to be going next.
They do look kind of spent. I mean, they really are not. They might be duds, and it goes sideways now. A lot of them hit retests of patterns. I think Doge at 7 cents was like the perfect case study of total crap coin. Definition of crypto nothingness, just a pool of money. Great patterns, but it came after the January, February run. It just rolled right back over, get back to support levels. And so, until this thing does something dramatic, and that could be a while, any bounce is going to be a reaction. It may be a 4-week, 6-week reaction. And so, there's interesting things down here on some of these patterns. We talked about them today on some of the altcoins. It's just they're hitting these levels in an ugly manner where, hey, I don't want to catch a knife. So here we are. Okay, yeah, we're past 7 o'clock. We're into the new day. I'll be looking over the weekend to see what the heck these do. Bitcoin is trying to hold that 27,000. Altcoins, though, like you said, there's too many of those that haven't done much, and then any of them that did anything, I would say just about all of them have already retraced 50% of their gains or more.
You got to look at like the swing highs. I mean, even the one that was crazy in October on bullcrap, Elon tweeting, okay, all of them, all the pumps are like that, but it was lower than the high even from April of last year or March. These two highs higher than this one. So even on your most insane rally on Doge, the sell-off occurred, and what happened? A formal bearish back test.
Can you take a look at JetBlue? Wondering if it's at actionable areas for longing.
Hold on a sec. What's up,
lost
dude?
you there.
Yeah. Sorry, someone was tipping, so I had to turn down the TTS. But thanks for the contribution, Rethink, and Rob. Yeah, I figured it was going to be, dead. Thank you. Is it time to revisit Total 3 again? Yeah, we can look at it. We'll look at that, okay. So we're just going over the psychology of Doge where, you had the buying climax, then the massive drawdown, the crash, and then the attempted rally. The attempted rally just formally back-tested. The market participants gained confirmation they needed to know, I guess, at the time, that what was once support from February and March 2022, it is now resistance, undeniably. Drawdown, a lower low than the previous low, but these two lows are still higher than this low, so it's kind of, you're not dead yet. So then another rally ensued, and it was what? Lower than the previous highs, right? And now you have a matching high. So to me, it's like just confirmation that there are less market participants than before, and that's just bearish price action. It's just so bearish when you look at it like that. Lower highs, then you have the same high that just confirms these two lower highs than the highs before it. It's just really bad. This is like what the index funds were doing all last year on the way down before they finally stopped in like October. And I think many assets in crypto did that. So yeah, and then you look at like something like Cardano here, then yeah, it's recovered. It was down 4+% earlier. It's holding on that 200-day moving average. Waiting for my crap to live, man. This right here is just, in my opinion, is bad. Anything below 37 cents is terrible. All right, there's the new day. Jesus chimes.
Yep.
New daily candle.
You needed to get out of today.
Yep. So closing below every level, right? The daily candle high close from May of 2018, even the wick high that same day. You confirmed the up thrust back test, and then you fell below the candle close, and then you tested it as resistance, and you just bearishly engulfed. I mean, Cardano just had its lowest daily candle close since March 27th. How did Bitcoin fare? Let's go to it just to look at it. Lowest daily candle close on Bitcoin since March 18th, maybe. It closed right at that same price. But it is confirmed now, and if you look at it, if it was an upsloping support, a demand line, it has been breached with a candle close. Now, a back test would be normal, right? If Bitcoin today ran to 27,265 and tested it, that would be normal. But if you look at the horizontal line, looking at my quad screen real quick, you can see that we have not breached that level. That 26,652, still above that by the grace of God for now. But that's what just happened moments ago.
Yeah, it's safe to say 27,000. That's your make break. And I don't, not that would be anything devastating other than instead of anything happening this summer, you got to put off that till much later in the year. That you're going to probably go through another grind here if it's just going to take a lot more time than making progress here. Probably makes sense. Around fat number 25,000. All right.
It's just crazy, like how Bitcoin is. It hasn't broken down yet. Just like we're waiting, And then Ethereum, it seems a little bit, it's not below 1730, but at least we know that's the target area, 1728. To test that level all the way back from 2021. And if you don't hold that, then you got lower prices, right? Demand line. And that was like yesterday, if it just went to the demand line, there's about 15-16% downside on Ethereum. That's what I said. So a good start. You're below the heart line now. And it just seems like the stage is set for some lower prices, but not like it's all over for Ethereum or pandemonium and it's like it's dead, going to zero. How could the government do this or whatever? Just maybe lower prices because the technical indicators at a resistance after a doubling in price from the lows. That's not that weird at all.
Yeah, respecting the channel. And any move would be reaction within that, and I don't. The target one I'm looking for on Ethereum is still 2,400, but
yeah,
I've been thinking more like September, and that this is a perfect reason why, where it's there's just too much of the moon, looking for the moon phase when things are reacting. They're giving reactions, but they hit targets, and then they give it right back. You literally go a lot of times.
Traders
2 steps
market,
forward, 3 back. It seems.
Yeah, it's just like a trader's market. I mean, a reversal presented itself beginning of the year. They played out. They hit 1-2 targets. Almost none hit 3. And then it was over for them. They were done. And it's like, that's kind of the way it is. In really bearish market conditions, secular bear trends, that's about what you're going to get. You're going to get okay performance initially, and then this type of behavior after, and that's just indicative of the market. So J-Talk, thanks for the 25, dude. T-Dog, I know people are requesting. Why y'all wait until I'm like live with Scott Carney to be requesting things? Where were y'all this week? The whole week. No one requested anything. And now y'all just like, I'm going to blitzkrieg Ray with requests while he's got a guest on stream, and I never have guests on stream. I appreciate it. And just like, I'm just curious. I'm like wondering why y'all want him to be involved on these. I mean, so anyway. So yeah, man. I just BNB I think was the best for like downside potential because. You see the rule of 3, man. 3 peaks, 3 valleys, triple divergence, and this tweezer top that happened to, for the first time, test the tip top of that inflection zone. And then right here, looking at in the 4 hours really pretty, to confirmation of distribution. And it's like that's it then. That's got to be it. Then it's time to post the short. Stop loss would be not even 350. It'd be somewhere above these local highs, because I think the whole argument is, like, I'm seeing confirmation here that there are less market participants finally. You didn't have that on either of these peaks. So bearish engulfing candle confirmed, lowest daily candle close on BNB since March 15th. And there's just a lot of downside potential. It's potential, and it started to play out well off the entry, but when follow through, when mega follow through, again, if Bitcoin breaks 26.6, you know these shorts are going to play out. These setups are going to be brilliantly successful. All we got to have is kind of just a flush on Bitcoin. What's up, Neff? Thank you, dude, for the 420. It was like the 29.20 total, I think, today. Thank you, man. Yeah. Session top Jesus. Session top Leroy. So I think the argument had been kind of like better for shorting crypto than long it. But then you go to something like Amazon, and it's just kind of switching gears. But the argument was the other way. The argument was like, well, look, man, we don't know if it's going to really go here or if it's just going to fake out. But we had the signal, like the market gave the signal to go long a few days ago. And all it was momentum shifted back to bulls, to buyers after the very nasty, bear trend. And it's still in a long-term bear trend, secular bear trend until further notice. But because you're going to get rallies. Did the trend reverse just because a nice bearish back test of a key inflection point from 2020 got tested back in August of last year? No, God, no. Look at the drawdown. The lower low got put in. So yeah, right now, the break above the inflection point from 2018 and 2019, but then it was that back test. But more than anything, it was the Japanese candlestick reversal, the piercing line that is just glorious. And that was the confirmation, and that was the signal. That was like, okay, well, we're good to go then, because this is valid. And it's been great so far. I don't know how long this will last. Those gaps are going to fill. And when that happens, the market's going to be selling off. The whole market's going to be selling off because this drives the market. But, and you haven't taken out that high from February yet. But it's like the opposite end of the spectrum, where we were just looking at crypto, looking at Ethereum, up thrusting, back testing the up thrust of a key resistance. And this one was breaking a resistance and back testing the resistance as support, like legit the opposite. And same thing with Shopify. This trade setup was insane. Classic accumulation, very similar to Google. All right. The market participants had been accumulating consecutively, proportionately. I'm just waiting on the data everything to pop up. And then right there, once you really started getting back above 42.87, right? You virtually back tested the spring 2019 peak, and you understand there's just there's no general consensus area for people to set up sell orders until like 59.50. And look at, and yeah, you were definitely blessed with earnings, and this could very well be a breakaway gap where this gap doesn't get filled anytime soon. And the signature of a breakaway gap is extremely high volume and a nice price disparity, right? From the day before to the day of the catalyst, right? Where you gapped up. That's a massive percentage increase on high volume. So any pullback could just round out before filling, and then you're going to go higher for a much deeper retrace, quite possibly. We don't really know that's going to happen. That's a little more speculative, and that's almost like saying you're making a call, but we're just trying to identify a particular type of breakout or a gap up. There's 3 different types of gaps, and this is the strongest one potentially. Gotta love that target getting hit. And then I think about $78 would be the target after this. You were talking about maybe like 100, weren't you, the other day?
Yeah, I think stocks like this, especially with that moving average action, easily go to a 50% retracement of the bear trend. I mean, you can trace out a shark, a real nice one on Shopify, right off the top, and that would lead you to a 5.0 minimum. So that's, you go 180 down to 30, half of that. Yeah,
$100.
105, yeah, 100. I think 105 is probably.
Common retrace.
I think there's a group of stocks that are going to run this summer. Then there's they're tech stocks and there's things like that. They're all playing catch up. The Microsoft, Amazon, Google. Yeah,
Yep.
they're out and about now. They've been fully advertised and I personally, with all the patterns that were in that whole group, those are potentially major continuation lows after what might seem like a long-term gift now. Meta going to what did it go to 90, and Amazon going to 88, Google the same. I mean, and all of these going basically under 100, and now you see what they're doing, and they've got a lot of room to kind of recover, and nobody's even talking about like the next cycle and when it goes. Can it go to all-time new highs or at least retest the 886? I'd be of the really favor a lot of these running for their relative 886s that look like this. They've got to look like that, busted out. It's a big move. It's that was progress. The Microsoft thing from a couple weeks ago, that was just a stellar move at major levels that said, okay, there's only one other thing. Microsoft goes for the 886 at 340 by the summer. Meanwhile, all these other assets are sucking wind, doing nothing, especially the smaller ones. I mean, with some exceptions, but you got the mega tech running, and why not?
Yeah. Someone asked what secular downtrend means. So secular just refers to like long-term trends or market activities are not impacted by short-term factors. Meaning, so like if you're in this long-term secular downtrend, the short-term stuff that's going on, it just really isn't gonna mean much. And this is not the example. You look at the index funds, or you look at something like ARK. Short-term factors don't matter, because some of these assets are going way lower, and maybe you think about like something like PayPal. That's like secular downtrend. Like no matter what.
Yeah, I agree with that. Actually, that Microsoft chart or the PayPal chart, yeah. Is it like permanent destruction, or is it just like Microsoft, which is looking like it's more a long-term correction with a reasonable correction within the long-term trend? So that's more cyclical. But something like ARK, is that a permanent devastation, destruction that
looks
secularly
decent.
changed?
It definitely looks okay. Actually, just looking at it, I switched to PayPal though just now, and clear bearish breakdown below the level of levels after all the distribution too. Like it's not like insiders and smart money were continuing to offload. That price action was just asking to collapse, even though it was holding support. That amount of time at a support,
Check out your 200-day moving average too. I mean,
yeah, look at that rejection. Yeah,
that was a rejection. Whereas Amazon, Apple, Google, those were multiple tests on the other side, on the positive side of that 200-day, turning back up. And PayPal was just a rejection and said, nope, sorry. That easily goes to some kind of 1618.
Gap fill at $45. Let's target 45. There's another gap at like 55. Yeah, like it's just, you could come back to $68 though, I bet, to get some really stupid money to try to buy. Like it's just going to come back test the old levels that it broke as resistance. Yeah.
All-time 886. Where's that?
Dude.
Because that's all that's left.
Probably 42. Let's see. From the low to high. 886 is 6150, or $61, which you're almost there. And there's no support there. So the 886 by itself, no confluence with historical levels. It's just not gonna. It's going for a 98% retrace then, probably. I guess we'll see. Yeah, some of these just brutal.
Might be the biggest island reversal I think I've ever seen in my life.
Which one?
Oh, is it officially an island reversal at about 140, 135 on that daily chart? It's like a
130,
I don't know. There's a big hole in that chart around 140, 135. I was wondering if it was like a
it's kind of like it's like I'll show you the gap, right?
Yeah, that gap. I mean, that's
my
like
God.
The
like island reversal of all island reversals. This is like a continent reversal, right? Continent high reversal. It is dubbed.
Yeah.
That'll be the next April Fool's joke, right? That's disgusting though. Wow. It's a wormhole. Yeah, just no liquidity area. Oh, did you see what happened to Disney? Disney obliterated, down almost 9%.
Really?
Yeah.
I haven't looked at Disney in a while.
So this is what happened to them on their earnings. They reported. They lost 4 million subscribers in Q2 of this year. And on top of that, they lost 2.4 million subscribers in Q1. So what they're doing is not working. What the content they're producing is clearly losing them subscribers. Do you think that'll change them? Well, when the woke mind virus infiltrates its host, it is unable to change. So
pretty ugly chart too.
Yeah, it's just look how the sellers have reassumed control of the asset. Look at these eyes, all of them. They're all lower than the high from August. These are less market participants involved with the asset. I mean, when you look at lower highs like that versus just it's just a random thing on a chart, it helps you understand. And $90 is a huge level. Breaking that, you're going straight down to 78.65. And if you don't hold that, oh my God, let's go to the weekly.
Yeah, moving average rejected that pretty hard too.
Oh, it's brutal, man. Look at the weekly confirmation. High, then the second high. And this is just a mega red candle. It's not like going to take out that. Well, it would be like, say, in less than a day, say it closed as is or lower, it'd be the lowest weekly candle close since December 2022. Wow. So it would be the lowest weekly candle close of the year 2023, and with a clear support resistance broken. One more upon you at 90. Once that is taken out, the downside potential below 78 is got about 12 to 13% downside. And if you ever broke that, though, that's where, wow, like PayPal support that was breached, $78 is the big one on Disney. Below $78, you've got potential downside of 43%. That's incredible, isn't it?
That's a tough one. There's big numbers at 88, and even though it's trading 97 at the moment, I would think
92
it goes back
now. 92.
Oh, 92.
Remember,
okay.
it's down like $9 or 9% today.
Okay. Yeah, I'd look at 88, but I agree with you. I mean, it's not even worth it to touch it until it puts in 3 more months of trading to anything. And if it does breach, yeah, I mean, that's where larger problems certainly can happen. And it's a weekly close, probably under 80 or under 78. Then you're talking then you got to really think about secular versus cyclical.
Yeah.
Because that could be, then you just, hey, they're all doing it. The ones that are getting really hurt, no matter if it's crypto or if it's these stocks, they're on the verge of doing those 886 resets, and they can happen here. I mean,
Problem is, it did that. Disney did that from its own COVID crash low to the high. It broke the 886 again today. It's been consolidating there. It's been pausing, and the data revealing itself at the area where you'd think a more pronounced retrace would occur. It failed with the lower highs. That's what's leading me to believe this thing's about to get freaking nuked. This is just not what an asset's supposed to do after it loses 88+% of its value from the previous discernible low to high. This is not it. You're not supposed to be making a high, back testing resistance as resistance with a shooting star reversal. It plays out. Then another rally ensues. And what happens? This is like a tell, right? What happened the week of February 6th? The buyers pushed the price to attempt another test of that key inflection point that cannot be denied. 2015 and 16 peaks, right? They failed because there was just not enough demand and or there was too much supply. Again, to me, that is a subtle tell of weakness. You can't, you go to 118.39, but you can't go to 120.50. Nope, no way, dude. That is so bearish. Everyone's out. Everyone's getting out, man. And here we are months later.
Nasty week with nasty wicks on those weekly candles.
Yeah, complete and utter rejection. And that's what I'm saying. The 886 here, you get down to the 886, and then that is when the argument for the bulls and the buyers comes in. And during that period of time, you see what can happen, right? I mean, like if all of a sudden you're just performing like this, well, that 886 is eventually going to get absorbed through. Like the selling is going to absorb all the limit buys at that magic area. And once it breaks, that's when the levy falls out and you go back to 78.65 and maybe even $44 way later, which would be, guess what, a 1272 fib extension that is confluent with that next support resistance. That's crazy.
Yeah.
So
yeah.
Anyway,
I mean, it's not, it certainly hasn't done anything in the last year. And it's just been, looks like it wants to threaten the COVID lows.
Yeah,
then,
it's bad.
And then see.
It's real bad. And then you'd think like, hey, the risk is high for going short, right? Because it's at an 886 and one's never supposed to be shorting at 886. This is where people are supposed to be going long. Well, only initially or when data is presenting, a stronger argument for upside, like, okay, you rival the previous high, and you sell off, and you make a higher low, and sellers are unable to go retest $96, $97. That didn't happen. Like, I think the context is important at the 886. And this is like, the 886 is like the area where the buyers put in their argument. They have a limited amount of time to present an argument, and they're now out of time. And so that's like when I think the sellers are going to take back over control. They already have. They've never lost control. I just mean you'll be leaving consolidation phase and you'll be entering impulse phase soon, right?
Yeah, I mean, and you're at that major 886 on a weekly. You're more than 30 bars in. I mean, anyone can look at that and say, okay, what's that last 30 bars doing? Not really going up, not really putting in higher lows or higher highs. In fact, you're right back where you started. It's not a good thing. I mean, and that matters. I mean, you hit a major level like that, then you go into that 30 bar, in this case, 30 weeks to do something, a couple reactions that's expected because it's such a major level, but you're right back there. Certainly not. I was saying 88. I was actually looking at the chart again. I think it's more like 85 on this level, but you crack 78, then you are, you're that's a continuation of something larger, and that's what the last 6-8 months say. It's a couple of lower highs after such a decline, says it's not over yet. So
yeah, you know what, the 886, a major 886 from 2002 to this high is like 34.47, 78% retrace is 53.57. You're currently at the 618 from that 2002 low to high. The 618 is 88.67. And it seems like where you actually bottomed out January 3rd. But after that, the new data is redistribution. So don't think that would hold this next time around once it gets tested. So yeah, Disney, you're screwed. Maybe stop trying to indoctrinate children into this insane ideology that has blitzkrieged American society. Maybe you shouldn't do that. Maybe not do that. But hey, who am I? Whatever. And then pushing, racial tensions on ESPN, just all this stuff that these deluded fools in leadership positions, what they're doing, they're destroying their own brands, and there will be a reckoning. There will be a wipeout.
Yeah, there will be a reckoning. I mean, listen, you lose money, you're out, and I don't care what they're trying to do. If you can't make money and your stock's going to continue to do stuff like that, you're going to get replaced. And it's just because at the end of the day, no matter what, people need to make money, and this is not making money. And they already brought back Bob Iger after he left, and it's so funny because he left. He dumped everything pretty much close to the top. I mean, he left, I think it was right before COVID, and then he dumped it out and just basically sat on the sidelines, and now just picking it back up. But you know, I think it's, you see it, you lose money, and it's a major company that should be making, I mean, they do make a lot of money, but they spend a lot of money, so net they're not really progressing. You see it in the chart. You're in a two-year downtrend on a weekly chart. And normally I would say that's the kind of stock to look for after it's done a 2-year correction inside of a long-term downtrend, but it's not giving you any hope. I took a couple shots on that back, I think it was late last year when it got down to the 88 level the first time, but didn't follow through.
On Disney or?
Yeah, Disney.
Yeah. Yeah, you catch your reactions like all the cryptos did, right? They all went down those major levels, and then they reversed, but they reversed temporarily.
Yeah.
Because we're in a secular downtrend. It's just nothing, there's just not going to be enough market participants to ever recapture those highs anytime soon. So, like, I switched it over to another woke company, Twilio. They actually fired people based on their identity, based on their race in Q4. And you can see what's happened to their chart as it's gone well beyond an 88% retrace. In fact, the most recent discernible event, it seems like, is a formal back test of what was once a resistance September 2016. It is now resistance again. And you're rolling over. You got the local lows, but once this breaks, I'm thinking you're probably going to go to 2349. This is like a 2000 tech bubble crash, right? Where these assets just do this, for years before they finally, an accumulation campaign begins, maybe from the composite operator before then it starts recovering. But yeah, just brutal on some of these woke companies. Yeah. And they don't have to be woke too. It's just really, just happened to be.
Well, it reminds me a lot of the .com hype stocks, no matter what they did internally. These were concept stocks. They got their run 2018, 2020, and came back on the other side of it where, yeah, it's just simply breaks down into one of two categories. You either retrace 50% of all of that multi-year gain, or you come back and do a full 886 retracement and then start over again. And that's very common. You go to long-term charts, you're going to see that a number of times over decade to decade, and even in big tech stocks. But these kind of stocks, I think it's such a steep correction. There's probably ones that are better, like what you were showing on Google and Amazon and Microsoft, where they are relative to their 200-day moving average. They're above there, making progress. They put in the lows. This stuff, yeah, deep value at an 886, but you need to put in a few lows. You need to put in, maybe like 2 or 3 months of work of a couple of consecutive lows and consolidation before it can really explode. And I just think, there's another one. Yep. I mean,
Farfetch, internet retail.
Mm-hmm.
They never make money, right? They never make money, and they're at all-time lows like every day. Yeah,
well, that's beyond. What's that? Beyond Meat and Carvana. A lot of those are. They're all. You're going to go back into history and say,
"Oh my God." Beyond Meat today down 18%, all time, old wedge, but all time lows This is done. I mean, this will probably in the coming, year, it'll maybe go bankrupt. It never makes money. Remember, it never makes money. It is one of those big losers, and it's a weird concept, dystopic concept with Bill Gates involved, right? I mean, this should go to zero. I want this to go bankrupt. I don't want the regional banks to collapse because I know that's consolidation of the banking sector that will ultimately turn into our own, into tyranny. It will turn into tyranny one day. But beyond meat, fake meat, I want this to go to zero sooner rather than later. And it seems like it's headed that way. It's on a freight train. So yeah. Wow, I didn't even know that happened today. Jesus, that's garbage. I'm sure there are more. I mean, today, like you had Weight Watchers collapsed after hitting resistance twice. Look at this bearish engulfing candle. This is just a trade, man, right? Like the buyers accumulated and then they ran it up to the level. Look at this. It's so perfect, man. It's like you can't make it up. It's so effing perfect. Where what was once support from 2016, resistance 2015, have had this level marked. You went straight up and now you're engulfing, closing and reversing. The traders made their money. They're now exiting. The people that bought in low are selling, offloading their position. So that's all it looked like to me on Weight Watchers, but it was down 19% today. Awful. And Tilray is down 11.6%. The weed stock, remember? All the weed.
Those have been, that was probably the most disappointing sector of 2021 or 2020. Yeah, 2021 even. Those are zombie stocks.
Yeah, sitting at that COVID crash low like today, you closed like at it. Yeah, not sure what to make of that. Garbage.
Another 2020 concept stock came all the way back, and then, like the rest of them, it's just ticking time bomb before the equity is not worth anything, and the bonds are worth a fraction of what they are today, but it's not. I mean, it's just amazing how this stuff, even the ARC stuff on a high-tech level, it doesn't matter. These are all the same. They were all busted concept stocks, and they're not opportunities until they would print something completely different,
Look at Workhorse.
Yeah.
2012, 2014, 2019, and here we are, 2023, the same price. What kind of mania, man? Asset going to $43 before crashing 100%. So, hey, is it going to hold this time? Historically, it has, but my God, how long are you going to be waiting down here? So bad.
15, 19, and you're right back there again.
Yeah, it's so dumb. I mean, IPO price at $10, it's now 95 cents. Wow, so it's down virtually 99% from the IPO price, I guess.
Yeah, that's usually the broker or whoever's like the supporting underwriter who's acting pretty much like the composite operator. They're the ones dumping that. Once they run it and dump it. And
here's your boy Carvana.
Isn't that amazing? 375 down to 11.
That is so crazy, man. Yeah, and then you're talking about, trying to regulate crypto exchanges because they're trying to protect the American citizen. Are you kidding me? Look at the stock market. They don't even talk about it. That these assets lost 100% of their value in like 150, 200 days. Just gone. Yeah, it's just, the hypocrisy is just nothing short of amazing.
I mean, that finally did put in a higher low 2 weeks ago.
Yeah, it did. It's crazy, right? Like,
and I mean, that was the first time, and I mean that's the kind of thing that would be a starting point. I mean, with a lot of these that are just complete 886 retraces, you need to see something like Carvana's doing for the first time, and since it started the decline, it's put in a short-term secondary high. Now, will that continue? It'd have to get above 20 to do anything. And if you're down here looking for opportunities, I don't know. I mean, it doesn't. I'll be looking at this one. I mean, I'm looking at Weight Watchers. I'm looking at 4-hour. I'll look at 4-hour charts. You got some things here. You had some things back at around 670, but you know, this is Carvana.
Yeah, and so I mean, there's
interesting. I mean, it's all a matter of where you want to focus on.
Yeah, I mean, do you want to go long with a looming recession? I mean, I'm just looking more at like, do I want to buy at the basement of assets that are at the basement because they don't make any money, or do I just want to go short on maybe an energy sector that has done everything? We have the best technical argument ever for downside on energy, and there are ones that are already going for it. Like look at Halliburton here, hit its lowest daily candle close today since October 4th of last year. This was like what a run, and look how it ended. And it was all, these are lower highs than the previous highs and the previous highs before it, all the way back to 2014. Talk about secular downtrend, because no matter what happens, there's gonna be less market participants involved than before, and now you're coming to like some more levels. Look, 2016. I wonder if it holds. But think about an 886 on this in a year, right? Like low to high 886 is like $9.
Yep.
So it's brutal below the 200-day moving average, rejecting the 200-day moving average. That's not a characteristic of an uptrend, right? You're always making higher lows and you're always kind of defending that level, breaking back above it, but that's not the case now. When are you using it as resistance in bear trends? You're below it. So anyway, yeah, and then a lot of these energy stocks are looking pretty ugly now. And let's see, NRG here. Look at what's happened to this one. Holy crap! You know, like bad earnings, and then look, has now done it. It's like confirmed distribution, confirmed resistance is resistance again. And it's now sitting at a local support. Or what happens when this thing breaks on NRG? It's electric utilities, which is not quite the same as like straight up oil and gas or whatever. But I mean, just look at the price action that occurs below $35. Look, it's like straight up and straight down and straight up, straight down. I mean, target area minimum like $25.
Yep.
It's so bearish. It is confirmed that it's bearish. Wow, below the 200-day moving average. The 200-day moving average is now down sloping. It's not up sloping. All after what a crazy run, you know, from the COVID crash to the highest high. It went up 141% in a couple of years, and now or less than a couple of years. But yeah, I mean, just so bearish. Like, have your alert set up like just below $31, because that beep will be telling you that energy is breaking local support and about to draw down a lot more. Yeah, I don't know. They just kind of like, we just go all over the place. So many things we could look at.
Yeah, XLE, same deal, but finally rolling over, and we know that that's at major daily, weekly, monthly.
Tell me this
levels.
Isn't. Yeah, no, XLE. I mean, I did a short on it. I had like Shaylin create a clip from a live stream going over it, and it got some decent views. Not really. None of them are like amazing views, but you know, it was good because it's formal bearish back test of the 2008 high where it crashed. It double topped there, and from the 2014 high to the COVID crash low, it's an 88% retrace with a double top. So it's like a type 2 return, you know, type of behavior with all this bearish divergence. And then you look at the individual oil and energy stocks that had been outperforming even the XLE. They were hitting global 1.618s and double topping and completing harmonic patterns and stuff with all the triple bearish divergence. Like everything you could dream of is happening on a lot of energy stocks, and some have already front run in the selling. But yeah, I didn't even mean to like. I went to this one because I'm very familiar, and what's happened today is amazing. Past 2 days, really. right? You have this is Darden Restaurants, right? Where if you can see what's happening to Cisco getting wrecked, which is the commercial food, like almost monopoly, and you see what's happening to just anything connected to food, not so much restaurants, they're getting wrecked. So I'm wondering if this is the top. What do you think?
At 886, pretty close.
It didn't quite hit it. It's on 86%, 87% retrace. But it's like the rising wedge is broken now again, for real. And what's subtle here, someone just TTS. What's really subtle and makes me believe it could be done is the fact that, you rallied March 29th and you saw your highest high really since like 2021. But then locally, look at the price action. Look at these subtle lower highs. Look, the buyers attempted to rally in mid-April, and it was slightly lower than that highest high. But then the drawdown, it was some weakness coming in, and then a false bearish breakdown, or another rally ensued, and what occurred? Another lower high. So again, just talking about this price action locally, it's subtle signs, subtle little signatures that there are just a little bit less market participants involved than before. And really, the fact that the buyers could not push the price to go make a higher high, the same high, or even go test the top of the wedge to complete the 886, those are all to me like serious signs of weakness. And now we're breaking down, and it's not just the wedge breakdown. Look, it's the high of highs from March 2021, that first time it saw it. It's a very real level that's been regarded as resistance. You broke that. You might back test it, but to me, that's what gave me like that's just kind of my thought process on why I think it could be done now. It's already done. Not going to hit the 886. Just going to hit the 886, Yeah,
my software is actually where the alignment is. It's generating a bat pattern. It's not off the all-time high, but the kind of the internal, it's grabbing off of the 2022 high. It's basically 150 is the big number. There's a couple of the things a little bit higher, but and you crack 147. There's not much there. I mean,
I think 149, 150. The psychological 150 has been breached. When it was a key level. Yeah. I think think about what X, A, B, this is your C, the tip top of the C to the D. Could you imagine an 886 here at $53 in a year from now? Shoot, dude.
Yeah, and I've kind of got the possibility of retesting. You go back to the last June low and come all the way back around 117. You're at 150. 117 is not a crazy idea on there. Go back to retest 886 the June low.
Yeah, it's like an area of congestion, right? Between like 124 and 129, right? You see like these peaks from 2018, peak from 2019 just before the crash, and this was a legendary Gartley that occurred completed just before the meltdown. Oh my god. But like that's like your zone. That's like your next support. So this is like if someone's going short here, you're shorting at the lowest risk area, right? You're selling high up here. And you have this strong argument behind you. It's not just that. The undeniable buyer exhaustion here. It's occurred. And you'd think, oh, that's triple bearish divergence. Well, it's so weak, in fact, that on this pathetic histogram wick, this was actually a lower high on price than this high. So it's only technically bearish convergence, which I think is actually stronger than bearish divergence right now. Right? A lower high is distribution. I think a lower high in distribution is stronger than a higher high with divergence. It's because the evidence is there. You're not just kind of guessing and trying to forecast. You see the evidence that there's distribution. Anyway, so bearish convergence because of the lower high. So yeah, I mean there are other assets out there that doing similar-ish stuff. Like so, IT, which is Gartner. This is tech related, so it might not Let me let it load. It's still playing out. It's just so slow. But I love the way it's at 200 now. It's below it and it's regarding as resistance. Look at this. This one was just, this is legendary. I mean, look where, it's like similar stuff, right? Shooting star reversal, type 2 return of the bear shark, bearish divergence on that, on that second high. Perfect. And now, lower, it's just like stair stepping down. But most recently, what's occurring is this ice line going back from 2021 and 22, right? You can see it peaks here. What happened when the buyers were unable to break that level? Massive drawdown. Again, massive drawdown. What happened again? Drawdown, drawdown. Okay, so now after this extremely bearish argument develops, you're doing the exact same thing you did in February of last year, April last year, August last year, right? You're failing. You're confirming what was once resistance is now resistance again. 200-day moving average also completely rejected. Local lower highs. I mean, it's like the downside potential on something like this, if you use your imagination, what do you think?
Yeah, I mean, notice how, though, these are all coming back and finding, I think a lot of people are looking at those moving averages, and that is, you're doing the consolidation there, but really, if it doesn't pop off of that, yeah, you got more problems, and that just affirms that as a big double top up there, 886. It's an 886 up there. I mean, it's
too perfect. It's like so much downside. I mean, like if this bearish backtest really plays out, I mean, minimum downside is about 12%, 11%. Then after that, it's 28%. Then after that, it's 36%. And then after that, it's like 50%. Which I think, I know they make internet software and they do services. They make money. They make money.
It's an impressive long-term chart. I mean, if you go back 10 years, it's an impressive chart.
That's incredible, but it's like something changed. The COVID crash changed everything, where it was like this nice organic trend, and then the money printer came on. It then destroyed that uptrend and whacked it out. And so how do we revert to the mean? Let me go to the weekly on this and draw a demand line. So, I mean, this thing's way out of there. Way off base now. So, since 2009's recovery, look what the mean is. When you revert to the mean, you come back down to the demand line that had been over and over and over tested. So, the downside would be 167 here. And yeah, Momo shifted for a rally, but again, it's a terrible place to try to identify inverse head and shoulders. But I think that would be an adequate target, right? Just normalcy. Like the mean. Revert back to the way things were before COVID and the money printer. That would give you a good 45 to 50% downside. That lines up with the horizontal line support. To a degree. Could be like, if time goes by, it could be a lot higher. But yeah, I mean, just to me, this was the bull crap, and this has to resolve. Anyway, whipsaw down and way whipsaw up. So much max downside potential. Guess we'll see in the coming year.
Yeah, but that one, the way that is now, that looks like a lot of them a year ago, 15 months ago.
Yep.
So you'd have to wait on that one.
Yeah, I'm just scrolling through the watch list. And we've been live about an hour, 40 minutes. Starting to get pretty hungry. Went on like a 5-mile walk run today before stream, so I'm kind of like wiped. Do want to talk about, like we talked about on your stream, Alibaba, and it did confirm a close above that ice line of all ice lines. And
yeah, that was probably the best chart.
Yep. This is like a trade setup. This is definitely a trade setup. Like one could go long, whether it's tomorrow, the next day, or even today, and they'd be able to strategize a reasonable, tight stop loss and equitable profit-taking levels. Easy. This is a silver platter handed to ye. If you're in the Citadel or the Patreon, you get the entry, take profits, and stop loss. But this is completely matured. It is so symmetrical. I love the fact that, hey, if you're going to double bottom on the left shoulder, might as well double bottom on the right shoulder. Give me that symmetry. But more important than anything is the historical ice line, and that's what trading in TA is all about. Like, it's one thing to develop some sort of inverse head and shoulders, potential inverse head and shoulders. It's another thing. It's one thing to do that. It's one thing to also show bullish divergence on this second low locally to break it back above a level. But it's another thing to identify a momentum shifting, momentum shifting structure, and to breach an ice line from history, and it's all happening at the basement. Like, that is what makes this so good. It's very similar to NVIDIA, but it's not as good as NVIDIA because this thing went to like test the all-time low right before 2023 began. And here we are, though, staring in the face of, the second largest e-commerce giant in the world, if you could even believe it. And it's just here. This is it. This is technical impeccability for upside, just as if I flipped the chart over and said the same thing. This is impeccable for downside if we looked at it this way. You know what this would be like? Look at Alibaba flipped over, right? And then I go to Cal Main Foods and the inverted Baba chart. Calm. Just takes forever to load. I think it's just I got to restart my PC. Same type of behavior where an asset is at a mega ice line, one high sell off, the slightly higher high ends up being a head and shoulders. And it's like, and then you confirm that high from history from 2015 is resistance, not once, but twice locally. And then you sell off. That was the lowest risk area. And then the earnings gapped you down and you're just sitting in the middle of this huge range between $34 and $63. It's crazy, right? Almost like this is Alibaba's chart, right? Almost,
Yep.
Yeah, so, I mean, had a couple people request some assets. Bitcoin's rallying off, this is typical price action on Bitcoin after it sells off into the stock market close. Almost always now, it rallies for the remainder of the evening, the afternoon, into the night. So I wonder if a back test of $27,300 would happen, which would be that demand line we broke. We'd be going back tested. Talked about that earlier. So yeah. So request wise, had a few of them. I don't know. I can do that when we wrap it up. How about that? I don't want to, it's just kind of like we have our flow, and then if someone's like telling us to look at something, it can be like weird for the flow. Were there any assets out there that you liked that you were liking for a short or a long?
I'm looking for lately on short-term day trade stuff. Just looking for 5-minute pullbacks on Microsoft and Meta, and I'm still long Google, Amazon. Those are longer-term plays, but I'll look for those to accelerate. As we talked about today, I think you gotta really spot the ones that are the charts that are really clear, and the others that are not doing anything, like the Disneys of the world.
They're doing stuff, right? Just getting wrecked.
They're not. They're just grinding lower. They're not even moving in a way. They might be going lower, but they're not even moving in a way that makes it for clean trading versus others that are like breaking out, accelerating, longer term charts. So within those short-term pullbacks. I think those are good opportunities into the summer. Other things, there's a lot of things that are coming back to the big 886 style retracements, but I think you have to give those more time. You can't just, not going to hit, like if the banks fall to those big 886s, I don't think it's an opportunity. Maybe it's the start of looking at them, but it's a process, and it would take the better part of many weeks or months to kind of shake out what has already started. So, we'll see. And, I would just kind of keep it still short term because, I'm doing a lot of short term stuff right now.
Yeah.
Not a whole lot at the moment that I would see long term. I'm looking at some lithium stocks, like look at LAC, Lithium America, and a couple of things like that. Got some, you're at a lot of support areas and things like that where they could be, that could be an opportunity there. And what was the other one?
Just the dragon on this one. Beautiful. Oh man, but the context on lithium is just, I'm glad it recaptured $20, but dang, dude, just lower high is distribution. People are just getting out. People just, just the trend kind of reversed.
Well, you're getting really squeezed. I mean, that 20 area versus that downtrend, I think you're going to come to some kind of resolution really soon. And I'm looking at that stuff.
Nice M shape though, little bat pattern or something. Type 2 maybe.
Yeah, exactly. Longer term, and I mean that's well above the trend, and I think that's, I mean it's one thing to be looking at. I think a lot of things, gold or what's the other one? Oh, Alcoa AA. Look at that one. That one is, you're all the way back down to retesting the lows recently.
Mm-hmm.
I'm just looking. It does longer term. Looks like it's rolling over. The weekly is better on that than the daily by far. You pull up your 200-week average, somewhere around $34-35. Might be. I'm just looking at that. If this fails the low, of course, it's going to be ugly, but it's a potential spot, and I think longer term, you need to kind of hold that weekly chart right there at 35. And hey, if it fails, I haven't done anything with that yet, but if it fails, that will tell me that would be another classic one, another classic 886.
I have concerns about AA right below 40. Look at this high. Look at this low from 2002 and just over and over 2010, 11, 14. Below that, I mean, it's like, it's just like, that's almost death, right? Like, because like below that level, look at the price, what it does almost every time when it rejects that, like how it goes to like $18, right?
Yeah, I mean, no doubt. And that's it goes both ways here. That's why I'm looking at it, because you're at the point where it takes out that low. It only, then something bigger is happening on the downside because there's only the 886 below that. There's nothing.
I'm setting an alert up on it. Yeah, dude. It's very interesting times. Financials looking terrible. Oil, energy looks like it's completely over now. Commodities, they already topped out. If we could look at the commodity ETF, which is the DBC, down 1.72% today. Look at this. Gotta wait 10 hours for to load, but you think, oh, that's just bullish consolidation. Maybe it is. Maybe it is, but the problem is the fact that it made an 886, right? It's like a shark, isn't it? Perfect shark, and it reacted, and I mean, maybe it goes for a type 2. But I'm just talking about something like this. This is, remember, the DBC is the commodities ETF, so it's an aggregate of all the different commodities combined, right? But can't tell me how beautiful this is, or how you know. I guess you can tell me.
Why not a shark down to a 5.0? I mean, it is a real nice shark.
Yeah.
Longer term.
That's 2075. I think that's like, I mean, I think if you break this level, you might hold. Yeah, it could be a 50% retrace, but the trend is long-term bearish, right? Lower highs, lower lows, lower highs, lower lows, and you put in your lowest low ever, and you just put in your lowest high ever, right? So that's not really good at all. And now we have this deflationary thing going on. I think if you look at like wheat and corn and soybeans and like coffee maybe and a few others, hogs, I think they're done. I think they're going way lower. But yeah, I mean, a 5.0, look for reaction at 2075, right?
Yeah, that would make sense.
But it might just turn into an attempted rally for a type 2 return of this bearish shark, right? And just turn into like 886, and then 1, and then 2, and then it's really done after that.
Yeah. Yeah, I mean, the fact that even with everything going on, you couldn't blast through the 2013, 2010 peak.
Wow. Must be lumber. Lumber really dragging things down. I don't know. I wonder what the highest weighting of the DBC is, you know, or if they're all equal at weighting. I'm gonna see what if there is any change or any difference. Let's see. Wow, DBC, which is the Invesco Commodity Index. What the? I type it in. Okay, so yeah, here it is. Copper is the highest weighted asset in this. So copper is not doing too hot, actually. Wheat is number 2. All right, so copper's 4.9% weighted in the DBC. Then you have wheat at 4.74%. Then aluminum, then zinc. These are in the 4s. Wow, I thought it was like, must be, I was just thinking about it differently. Where did they go? I don't know. I clicked on show more and it took me to the site and now I can't find it. Here we go. Portfolio. Oh, never mind. I found it. All right. So gasoline's top. Don't know why I did that. 11.68%. Then crude. Then Brent crude. Then gold. Then sugar, soybeans, corn, copper, wheat, aluminum, zinc, natural gas, silver is the smallest weighted, lowest weighted asset, only at 2.62%. So that's probably why this didn't get so nuked, but it was still down 1.72%. So all right, so it's like 30%, over 30%, 33% has everything to do with gas and crude. And then metals are going to be making up probably 15 to 20%, and the rest are all like food. So yeah, and here's the thing, right? If we're talking about the XLE being done, maybe, I don't, that really doesn't have anything to do with it because it's just energy oil stocks. But U.S. oil is kind of terrible, right? I mean, where do you think U.S. oil is going?
I think oil's going to hit the big 382 at $65 for a while. There are some patterns developing, but they're all lower. A lot of them are retesting some initial lows, but I think, yeah, you're going to need those to come in a bit more.
Yeah, I don't think this rally that happened recently is going to mean crap, even if it looks like, oh, it's confirming a low. It hasn't tested the actual inflection point yet. And look at the 3-day. Look at this 200, you know, just being rejected again. It's like one high, and this is the second high, the confirmation high, the squeeze that would usher in, you know, exit liquidity. And now you're back below the key inflection point. It's so important here, right? $75, $78. Going all the way back to 2006. I think that's like...
Yeah, that's rolling over.
Yeah, so 33% of the commodity index is this. So, you know, if your target's $60 here, then yeah, I don't know if that support's going to hold on that one. So
needs to shape up. This could be another situation, especially with a lot of the patterns that are forming on daily levels, that they have to go down. A lot of them are generally 5 to 10% away. things like Devon Energy, Occidental, Marathon, they're doing corrections, but if they go and retest these next levels and they fail, it will be a big failure. So it's still early. I think U.S. oil and spot price is generally going to float around 65 to 70, and you'll need more time before it really can change the longer term correction that it's in, and that could continue to slide. I mean, you just gotta wait and see how this acts soon. I mean, the last 2 years were spectacular.
Yeah.
And just reversion to the mean kind of stuff.
Yeah, I think Marathon's done. I may be wrong though, because it's still like uptrending and all that. But this is, I mean, again, right? The argument being the global, like the high from 2018 all-time high to the COVID crash low. It hit a 1.618 fib extension, the golden mean ratio, right? Extension, not once, but twice, thrice. And then and hit the supply line of the wedge too, and then broke it and back tested it, and had all this bearish divergence too. I didn't even have it marked up, and then now below the 200-day moving average. I mean, that's just like, if not there, then where? You know?
Yeah, that's why this retest is critical. Stuff like that. You know, with the 200-day moving average right where it is. You're either going to just do retest for the 4th time in 18 months and continue, or you fail. So, you know, you have plenty of time though. Let's see whether either way, but I'm watching.
Okay. Well,
I'll give you one more. Here's a good one.
All right.
I got to run. Pull up Amgen on a daily.
This is Biotech or something? I can't remember.
Yeah. This won't disappoint.
Oh my god. Oh, let me see. It's got to load. Yeah, that's it's been so choppy for so long, but yeah, below the 200-day moving average, lower high put in, and being below 244 is a key level. Anything below 244, you think in time a good target's 212, right? Wow, what a freaking...
Yeah, I mean, watch that, but look at there is a bat right off the top there, and that's why these lows are so critical. Is this another pullback of...
Oh, you're talking about the X is October?
Yeah, and is it, you know, is this a biotech pullback within a super long-term uptrend? I mean, this is the kind of stock... These stocks have been working, and they're the boring long-term uptrend stocks, and they give you a fat pattern. I'm not in it yet. I'm watching this. So I'll be watching this for next week. But you're at that bat pattern right off the top, and it's a perfect type too, because you went through the reaction phase. You're coming back up, and you're there at the 886 of that swing from October. So, you know, that's an interesting one. And you look at RSI, that's on the daily, looks at a pretty good spot. So looks like it's moved a ton, but some of these other biotechs like these have really run. I mean, Eli Lilly's been exploding.
Yeah.
And that could be another one, long-term trend continuation.
Good God, it's like the Bitcoin chart on log scale. Look at this, dude, on the weekly. Oh my God, it's Bitcoin, dude. 1984, 8 pennies. Now it's at $232. That's crazy, man. Wow. Insane. It's just like impulse and then your consolidation is only up.
Yeah, it's massive. I mean, it is massive, but it's, you know, you look at the daily RSI, it's in a really good spot too. So that's like something for next week. That turns up, that holds up here. That RSI puts in a bullish confirmation.
Yeah, I definitely see. Don't fight the trend. This one's stupid. Stupid uptrending for now. Yeah, let's see if that type 2 holds or not. Yeah, it would be a nice finally to get some higher lows, because you just should have, in my opinion, this could be a sign of weakness right here. I mean, this could be Wyckoff distribution of sorts. But again, to say that is ridiculous because it never does that. It never goes down. So how are we going to be like, oh, now it's going to go down? You know, I mean, maybe not. But I hear you on that. Like, let's see if it pivots.
Yeah, I mean, I think it's like, you know, it's a 240 to 270 kind of a thing. And if it explodes through 270, then maybe something more happens. But it's in an interesting spot. And every time that thing's hit the moving average, you know, you're finding support, you're bouncing. It's long-term stupid uptrend. So kind of a nice 202 spot for now. Just something. You know,
yeah, for sure.
reaction.
Don't fight the trends.
Yeah. Well, my man, I'm going to run. I appreciate the opportunity and you having you on today. And let's get back into doing this more.
Yeah, for sure, man. Just let me know.
Do this maybe next month or something.
Sure, anytime, man. Just let me know. Stay in touch, and then just hit me up.
Absolutely, you do the same. Thank you, chat. You guys stay in touch, and we'll talk soon. All right, my man.
All right, later,
Peace.
Scott, man.
Bye.
All right, that was Scott Carney, harmonictrader.com, Harmonic Trader on YouTube. Check him out. Go to his channel, subscribe. He goes live twice a week, Tuesdays, Thursdays, around 12:30 Eastern. So yeah, just a plethora of knowledge, information, and he's an institution of knowledge. If you don't know, he is the man that wrote the book on the specific harmonic books or harmonic patterns. The bat, the shark, he made them. He like, where did the bullish shark come from? That's him. That came from him initially. The butterfly, the bat, the 5-0. Anyway, so yep, it's always a treat having him on because he knows a lot, man. So let's get to these requests while we can. Starting to get really hungry here. So was it Nefarious requesting something? No, he didn't request. But he did say Pepe wrecked, so might as well just look at Pepe real quick. Your once a stream Pepe update. Is it good? No, it is whack today. Very, very whack. Closed down 30%-ish yesterday. Not very good, as Bitcoin at least is up 0.18%. Pepe's down 2%. Yeah, not really great, man. Not great on Pepe. Still correcting. Yeah, but hey, at least officially achieved that candle high close from the beginning of May. No idea if it holds. If it doesn't hold, easy target of, I don't know, whatever that number is, 100,000th of a penny or something stupid. I don't know. It's a lot of just, it's worthless. It'll be worth even less below the support, okay? All right, that's for Nefarious. Let's go to JetBlue for Rethink Finance. Just waiting on the data to generate. Super slow going today. Restarting the computer soon. Well, this is the basement. Wow, this isn't the basement of basements, huh? Good Lord. Let me go to the weekly here. Gotta go back all the way. Oh, I have data here. All right, I have memory of this place. Okay, so very, very bad. Here's, you think it's all good, right? No problems. We're fine here, right? We're at the lows from the COVID crash. Well, here's the issue. You're at those levels. You're rivaling those levels. But the problem is $7.22. If you look close enough, you can see it was resistance in February 2008, January 2009, December 2010, even April 2013. It was resistance those whole times. Then it became support, COVID crash. The problem now is you have the asset is below that level. That's really bad. Like maybe if you're going to want to long at the basement, wait till it Wait till the buyers give you a reason to buy. So far, being below 722, there is no reason to buy or own JetBlue, because what happens based on history when that level is rejected or you're below it? You can get fast markdowns to $3 or even whatever, $3.40. That's the problem. COVID crash, you got to close right at it and immediately recovered and went to, it went on a massive rally, topped out at 22. But here we are again, and the price action is not near as pronounced. Oh my God, dude. It's the old Warcraft rock song. It's so dumb, dude. Okay. So anyway, right? It's a lot. There's no violence here. It's just hanging out below that level. I can't really like it until you break it and hold it as support. Then we'll talk. Until then, hands off JetBlue. And only based on literally what I'm talking about. This isn't an opinion. I don't know or care about JetBlue. I'm just talking about the levels and how the price action correlates to those levels based on history, right? So that's as far as I can go with JetBlue. Next request was total 3 for Rob. That oh boy. Just give it 10 hours to generate. Bitcoin near its highs of the day, the new day. Oh boy, yes, death is upon us again. I'm kind of scared to show you all this chart. Yeah, this is bad. Very, very bad. Wow. Okay. So we talked about if you're below $330 billion, your target's 180. Clearly, the selling was just too overdone. So an attempted rally had to occur. So right when and you're a long-term downtrend and rallies occur at near supports, remember what happens. You go through a period of time where it is the buyers presenting you with their argument for a trend reversal. And it could take months, but when you get the new data, you should have a better understanding of what's really going on. And with this new data from January to now, I can safely say that the sellers are still in complete control of this market. And soon, by the looks of it, 180 will be fulfilled. We will see $180 billion market cap on total 3, which is all the cryptos excluding Bitcoin and Ethereum. It is too perfect here, where the loser bear market rally is coming to an end. It is concluding with confirmation. Confirmation of distribution. These two highs are lower than this high from November. This high is lower than this high. This was the bear market rally, and all you did was get some formal bearish back tests of inflection points from 2021, their resistance, and now you are below $358 billion, which is unfortunately the 2018 cycle top. Think about how bad this is, where there were only like 3,000 cryptos at the height of the bubble in 2017 to 18, right? It was the beginning of the year. Now you have 18,000 cryptos. And without Bitcoin and Ethereum, you don't have a leg to stand on. You have less market cap than at the highest height of the mania in 2018 when there were 3,000 coins. Just think about how bad that is. So that is why I think you've just confirmed death to altcoins. It fits the narrative. So from here, unless a miracle happens, right? The miracle would be 330 billion holds, and then you pivot and rally off that. But if, say, the miracle doesn't happen, and what we just received over the course of, a few months if that's real, if we're identifying the confirmation distribution, then you got a good 48 to 50% downside on total 3. Yes, Stray, there is. Bitcoin conference, not loser S coins that have a lower market cap collectively than in 2018. Yes, Bitcoin conference. So no one mentioned Pundy coin or Pepe coin on the 18th. If you visit, I'm just kidding. I like Pepe. He's cool, dude. Not the coin, because it's just another scam. But, you know, the emoji's cool. All right, next request was, thanks, Rob, again. Let's go to VNO for Golden Knight. Sorry, a little late on these, man. It's just better for the stream if you just do it solo, because it's just me blasting through them. Vornado, Realty Trust. Oh, yeah. I was making jokes about this one. Well, it's essentially collapsed in on itself like a dying star. Approaching the next support from 1994, which is 1135. You're not there yet. You got a couple more dollars to lose. I wouldn't even think about it until it hits again. Here it is, the ice line. Not opinions, just reality. No test yet. So that means that VNO has about 14 to 15% more downside. If you're talking about it hitting a level, a support. Below that, man, let's see. Oh my God. If you lose 1135, the support resistances start getting really weak, maybe $5 to $6 after that. Yep. Yeah, Vornado Realty Trust. This is investment. This is a REIT. It's based on the price action. It looks like a commercial real estate investment trust, right? Good God. Three-day charts hit hard because it's the sweet spot between the 1 day and the weekly. Not quite, but it is in between those levels, in between those time scales, and so it's significant, daily significant, but then the 3-day, 3 times more significant. Plus, you can identify some really cool stuff on those. See the next one for JTOGs, TDOC, Teledoc, Health. Yeah, it's an ARC coin. But McCarthy Woods. Oh my God, dude. It's so bad, dude. What's up, Andrew?
Scott earlier. Cheers to the draw clank.
Yep, the Goudan mustard clanks. Thank you, dude. Well, here's the problem with, I really appreciate it, man. The problem with Teledoc Health is, remember, when you bottom out, momentum shifts, and then it's like, well, what happens next? What's the next event to occur after the potential bullish reversal? That new data comes out, weeks, days, months, and all we see is what was once support from 2022 is now resistance for the first time, really, and significantly lower high than the previous high, than the previous high, than the previous high, of course. So to me, after this, I would no longer be bullish at all. I would say that the buyers have given it a good chance. They've tried really hard to present their argument, but it is a miserable argument. Less market participants involved with this asset in April than just January, than just November of last year, than just August of the year of 2022. The supports, as you reacted initially in December, that reaction is over with confirmation, and I think you're heading back down to $21, $22. If you don't hold that, then $15.61. If you don't hold that, $9.20. Okay, here's they never make money. Remember, they never make money. They always lose money quarterly. Hey, sometimes they lose less money than is projected by analysts. Sometimes they lose more money than is projected by analysts, but a certain thing is they don't make any. And we're in market conditions now where you don't want to own assets that don't make money. You just don't, dude. Okay? Look, let me just, I'll paint the zone for you to see. This is an opinion. This is actually happening. Do you see, with the, and this, I love the gray zone, really helps conceptualize ice lines and zones, where that is the most recent discernible event. Complete and utter rejection with what? Someone tell me what Japanese candlestick reversal occurred at this level. Ooh, it's close. Okay. It's simple though. No trick question here. It's not hard. It's a simple, say it. Just say it. Yep. Free Wyckoffs. Exactly. Yeah, lost your gun. Nope. See, I was telling you it wasn't a trick question. It actually covered the previous candle. So yes, a bearish engulfing candle appears after a formal bearish rejection. Wow. Way lower in time, meaning Kathy Woods gonna be homeless soon. She's been buying this whole time, and all the new data is telling us is it's going way lower, man. God. Sorry about, I always say sorry about your S-Coin, but sorry about your Teledoc health that never makes money, ever. Okay. But dude, it's the future. You gotta wait 5 years. Okay. Next one was ARK for Rico's trade. How ironic. Because again, Teledoc Health is a massive holding of Kathy Wood's ARK fund, which actually looks far superior to Teledoc itself. This probably has everything to do with Tesla today. I don't know which ones exactly were doing so well that it would make this stock hold. Let me show you here. This is good. This is bullish price action. This is the type of price action you want to receive at support. Spring, back test of spring once, maybe even twice.
Can we look at HIBs? Inverse of SPHB. Thanks, Mitch. Death to S-Coins.
Yeah, unfortunately, it's bad. But again, if you want to ignore reality, you can. I'm not really into that because you're just delaying reality. You're just delaying, like, you're not doing yourself any favors by ignoring reality where it's like, yep, altcoins have been neutered. There's not enough money out there. Money's harder to come by. Debt is expensive now. Terrible environment for assets that have no real world value, use case, purpose, none of that. So I'll show you here. This is real. Kathy Woods for now. The buyers are coming in to defend the zone that it's real. You can see how real it is. Going back, how many tests? You've just successfully done it again. So good, not bad. Even with that going on, you actually, unbelievably, have hidden bullish divergence. So this is how bottoms can look. Right? Again, Kathy Woods, what a joke. Haha, the whole way down, laughing. But here we are, all this time later after completely crashing, and buyers are defending an ice line twice, locally, and there's an edge. Can you believe it? That's not bad. That means like there could be more upside here. Just wait until like that whole argument I just presented to you seconds ago becomes completely and utterly invalid once sellers take back over and push the price below $35. Then everything I said doesn't matter anymore. It's all bearish. But for now, there's kind of an edge at a critical area and it's higher lows. Let's see what happens. Maybe there's a supply line here. There's a supply. That's the creek. Maybe you jump across the creek here. But with all that being said, one thing to be looking out for is if this really does turn into something, which it hasn't yet, but if it does, you got to start making higher highs. You got to start taking out your previous discernible highs. One being from February, the other one being from August. Good luck on that one, but just one at a time, man. Okay, thanks for the $1.99 super chat. I'm sure I have. I don't know. It's just your typical lesser than S coin that will go to almost zero, like most of them. the next request was SPHB, and that'd be the last formal request of the stream. SPHB, which is is it a bank? Maybe I'm wrong. It's just slow loading. High beta ETF. Ah, yeah, okay. High beta ETF. Just keeping it on the 3-day here. Ah, yes. I still have memory of this place. I have data from here. Okay, so not good on the 3-day. Look at that 203-day moving average. You are below it right now. You seldom are below it. Look at the daily here. Yeah, you gotta be aware here that this high from June, you upthrusted through it. You know, in February things were good, and now all of a sudden they were unable to keep the breakout alive, and now a pivot in an attempted rally that has just turned into a formal bearish backtest. An upthrust, backtest of upthrust. What was once resistance in June of 2022 is now undeniably resistance again. Another problem, and yes, I get it, maybe some bullish divergence there. Yeah, hold 65.50 and you'll be all right. But again, man, you're below the 200 moving average, not on the day, not just the daily, but the 3-day. A nice little shooting star right there. I don't really like it. I'm not really. I mean, if it holds, that's great. This is a fruit fly support. You're fine like a fruit fly here. You're not fine like a fruit fly once you're really below it. You're pennies away from being below it. Literally, I'm talking you're 4 pennies away from being at or below that level. So to me, it's kind of a midpoint. And if you want to talk about the bottom of the range, it's either $60 or $56. To me, if you look at like the monthly, this is like your chart of, it's like the chart, right? It's like the, maybe we get to the 2-week chart or something. Yeah, is it that was the attempted rally, and now it's failed, and you've started rolling over. And it's like XABCD, right? X, A, B, and this was the top of C, and then C to D would be the massive wave down to go fill a gap at like $36. I mean, it could happen. I mean, bearish convergence. You haven't seen negative momentum on the biweekly since November 7th. Yeah, this is like the complacency spot. You're at the complacency spot of the Wall Street psychology chart. Attempted rally, lower high. And I'm talking about is this chart. This one, right? Complacency, right? You know, the massive drawdown, then the attempted rally, about a 50% retrace, maybe even 618.
I'm shorting SPHB. I have a position on Hibbs. Go Dogs.
Roll Tide. Thank you, Scabble. Well, I mean, you're not off. You're not off base here. Again, below the 200-day moving average, you are golden for a downside here. But, you know, that was the lowest risk area. It was like 69.50. That formal bearish back test was good. Local lower high there too. So yeah, there's bullish divergence there though. So maybe it holds, but I don't trust this crap at all. Nothing that I'm really excited about for upside at all, and downside seems like that would be the case. That's where it's probably headed to. It'd be like a right-angled ascending broadening formation almost, you know, where it's like just kind of like this. That's kind of what it is, you know. Gosh dang it. Pretty ugly. I don't know. Okay. So that was the last request of the stream that was formal. Bitcoin down on the new day. Wasn't even able to run to test 27.3. the demand line. So looking at the horizontal line support, getting very, very close here to the test. Have your alerts set up at 26,650, because when you hear that beep, you know you're at the end of the line, where below that below that area, you got about, I would say, 6% to 7% downside on Bitcoin. So that's not really bad. That's not really that crazy. It's just a marginal retrace. People are going to lose their minds and say Bitcoin's going to 10K, and it's like, bro, it's just pulling back. It's okay, dude. Common retraces happen. People were calling for the end of the world when Bitcoin was dumping in early March and hit 20K and then bounced. People were like, I remember it. And they'll do it again. Once Bitcoin starts dumping, technicals kind of were lining up for it selling off. So TA respected, of course, but you're going to have those fear mongers, those people that get all those views and likes and stuff on Twitter. They're going to sound, oh, they're so smart, calling for it's over for Bitcoin again. They were calling for the end of Bitcoin in March, calling for the end of Bitcoin in December. Okay, so thanks everyone for coming out. I really appreciate it. It was a special Leroy Jenkins 18th anniversary stream.
Regulators in Canada have shut down and suspended all Cathy Wood's Canadian funds.
Wow, get right, Cathy. Well, I guess they're finally saying, you know what? She's lost too much money. She was like a drunken chimpanzee with a machine gun, like SafeMoon. Well, the returns were like that, so. Thank you, dude. Get right, Cathy, for the 690. 6.9. All right. So, I'm going to go get some chicken. But first, I'm going to go destroy some, some mini whelps and Upper Blackrock Spire. Gonna grind a little bit, man. You know what I'm saying, dude? So I'll just leave y'all with the initial clip, okay? That I will leave you with that. So thanks for the likes, love, support, contributions, everything in between. Please join the Discord if you have not. Great way to stay notified when I go live at random times when Bitcoin's dumping or pumping, because you'll miss a live stream if you aren't in the Discord, because YouTube will fail to notify you all the time. So I'll just be back. Until next time.
Heal better, have more mana.
Okay, guys, these eggs have given us a lot of trouble in the past. Does anybody need anything off this guy, or can we bypass him?
I think Leroy needs something from this guy.
Oh, he needs those devout shoulders? Isn't he a paladin?
Yeah, but that'll help him heal better, he'll have more mana.
Christ. Okay, well, what we'll do, I'll run in first, gather up all the eggs so we can kind of just, blast them all down with AoE. I will use Intimidating Shout to kind of scatter them so we don't have to fight a whole bunch of them at once. When my shout's done, I'll need Anthony to come in and drop his shout too, so we can keep them scattered and not have to fight too many. When his is done, Bass, of course, will need to run in and do the same thing. We're going to need Divine Intervention on our mages, so they can AE, so we can, of course, get them down fast, because we're bringing all these guys. I mean, we'll be in trouble if we don't take them down quick. I think it's a pretty good plan. We should be able to pull it off this time. What do you think, Abdul? Can you give me a number crunch real quick?
Yeah, give me a sec. I'm coming up with 32.33, repeating, of course, percentage of survival.
Oh, that's a lot better than we usually do.
Alright, chums up.
Ready, guys?
Let's do this. Leroy Jenkins!
Oh my god, he just ran in. Save him.
Oh, geez, stick to the plan.
Oh, Jesus. Let's go.
Stick to the plan, Chubs.
Stick to the plan.
Oh, gee. Oh, fuck. Give me divine intervention. Hurry up.
Shout.
He's saying I can't cast. I can't move. Am I lagging, guys? I can't move. What the hell? I can't aim. Oh, my God.
The eggs keep spawning. More respawning.
I don't think you can cast with that shit. Oh, my God.
Shout.
Take it off. I got it. Take it off.
Come on, down.
Oh, my God.
God damn it, Leroy.
God damn it.
Zero move.
Leroy, you moron.
Leroy.
Zero move.
This is ridiculous.
I'm on it. Don't mask. I'm down. Forking down. God damn it.
This is
I got killed before I could
we
remove
died
him.
on this. God. Oh,
See,
Spiffy res us. Spiffy
Why do you
res
do
us.
this shit, Leroy?
I'm trying.
It's not my fault.
Who's soul stoned?
We do have a soul stone up, don't we?
Anthony, you got soul stones?
Warlock.
Oh, God.
Oh, for...
Great job.
For Christ's sake. Leroy, you were just stupid as hell.
Over there.
At least I have chicken.